of self-driving cars over time. They made me nervous to begin with. But the truth is now I look around me in traffic and I see so many people tapping on their phones that I would rather drive in a world where at least the car was paying attention.
I completely agree with you. Carol knows my trip to San Francisco a few months ago. My life was like turned upside down with this, just my first experience in a Waymo. I think it's fantastic. I wish this stuff was all over because these things follow the rules and they're not texting and driving. But realistically, in your view, do you see that world existing?
It's going to take a lot longer to get there than some of the technology companies would have you believe. There are significant regulatory challenges because right now this is regulated by the states. So even if you can make the technology work, you'd have to work through 50 sets of liability laws and 50 different legislatures.
Maybe, but not if Elon Musk has his way in terms of regulations with Sean Duffy at the helm of the Department of Transportation.
Which is one of the more interesting proposals he's put out there. The other thing I'll put out is that when we start to master self-driving cars and actually get them functional, you open a whole new questions we've never run into before. Mercedes has the most advanced system for sale in the United States. It's legal right now only in Nevada and California. And they have proposed, just to give you one example, that the industry adopt teal exterior lights as a signal that the self-driving system is on. Because how are police supposed to know whether the driver's distracted if it's okay for the driver to be distracted?
Wait, what was the signal you said?
An exterior lights and colored in teal.
Does that work? Does that exist now?
Only in testing. And again, that would be a legal issue. You'd have to get 50 states to agree to that. The point is just to say that even once the technology works, we've got a whole public policy system that we'd have to work through and a lot of new questions.
But that's none of that has to do with the actual. Like a lot of what you're talking about has to do with policy. And with sort of the way that law enforcement looks at this stuff. In your view, is the tech there?
It's getting there, but Tesla has more significant challenges than most of its rivals in that way. Elon Musk is very insistent on doing self-driving with nothing but cameras. And the systems that have surpassed Tesla, like that Mercedes system that's the only level 3 approved anywhere in America, uses radar, cameras, and LiDAR. If Tesla can't adopt additional technologies like that, it's going to take them longer to get an effective self-driving car.
All right, Sean, I just was like, wait a minute, I got to ask you something. Are you saying Mercedes is better than Tesla when it comes to self-driving?
The automotive industry uses a system of 5 levels to describe self-driving cars, from level 1 being just your basic smart cruise control up to level 5 being a car with no steering wheel. Almost every automaker has a level 2 system right now, including Tesla, and Mercedes has the only level 3 system that's approved anywhere in the United States. What that means is that legally you can look away from the roadway while it's working. So Mercedes has that. It's only in Nevada and parts of California right now, but there is currently a Mercedes system you can buy that will let you settle back and read a book in a car, and Tesla doesn't have anything like that.
I have to say, I am a little bit familiar with Mercedes, and just their safety systems are like blown away, where you can take your hands off the wheel, and especially like on a highway.
That's like not even a brand new car that you're talking about that you have experience with, right?
Yeah, I have one, and it's old. It's over 10 years old, but the safety systems are unbelievable in terms of what you can do and how it just tracks and just keeps you safe. And what I also do wonder, Sean, that if we're not kind of quite ready to just look away and let the car drive, do we just continue to see the safety systems get better and better on these cars? Because I almost feel like sometimes I'm on a highway, you know, you put on basically cruise control and these cars are tracking, it almost feels like, with one another. And in that regard, I feel so much safer, where my car, if I get distracted, it's gonna stop the car if I miss the car stopping in front of me. And that's pretty amazing.
And those are essentially the same technologies.
Yeah.
The technologies that will ultimately result in self-driving cars, the first thing they do is give us those safety systems. And when all of those safety systems can work together and talk to each other, you end up with a self-driving car. That's also how the industry is going to have to get people comfortable with it. AAA did a study, I believe, just a month ago, in which 16% of Americans said they would get into a self-driving car. That's the public challenge that they face in terms of approval. 16%.
I don't buy that number, and here's why. The only reason I got into it in San Francisco wasn't even on my radar. And then I met up with a friend who was like, hey, did you go in the Waymo yet? And I was like, no. And she's like, oh, it's so awesome. Just download the app and do it. And I did it, and I'm a true believer. I'm converted. And I think it's just like word of mouth. And just because people haven't been around this technology means they're going to answer that question a certain way.
You may be right, but I think that as people get more accustomed to the safety systems, they get more comfortable with the car making certain decisions like that. That's how we eventually get to a world where most of us are willing to get in.
I was even talking, to your point, Sean, I was even talking to the Uber and Lyft drivers about this in the San Francisco Bay Area. Because as you know, in San Francisco, you can only do it in San Francisco city proper. It's like a very strict border where you can do this. And they prefer driving with these on the roads because they follow the rules and they make good choices. I mean, it's pretty remarkable to see. We're going to San Francisco in a few weeks, Carol. You're going to get in one.
What's amazing, Sean, is for so long you were like, no,
Yeah, I was like, I'm not going to touch this thing. Yeah.
And then he did it, and you can't. I mean, I like
like
that you constantly talk about it, but you can't stop talking about it because you were blown away.
I get into a car now, I'm like, why is there somebody in the driver's seat?
I know. I'm totally. Next time I'm in San Francisco. Sean, this was so great. Thank you so much. So appreciate it. Sean Tucker, the editor of Kelley Blue Book. Bloomberg Plugged In with Sean Tucker, joining us on this Tuesday.
Hey, coming up next, we are driving into the close. Ross Mayfield over at Baird is joining us. That's next on Bloomberg Business Week Daily.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow lower, the S&P, NASDAQ. They are both advancing. 20 minutes to go ahead of the closing bell on this first trading day of April, first trading day of the second quarter. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks are trading mixed ahead of tomorrow's tariffs, with Dow's currently down 94 points. S&Ps are higher by 7, while NASDAQ gains by 0.6%. The U.S. 10-year yield is at 4.16%. Gold and oil are in the red, and Bitcoin, that's higher by 3%. Among the main 11 S&P sectors, leaders were consumer discretionary and telecom. Healthcare was under pressure, and leaders to the upside in the Dow, Nike and Microsoft. Well, J&J fell 7%. That's the most since 2020, after its plan to settle the baby powder lawsuits failed. In other news, there are reports that Trump plans an executive order to increase weapons exports. And wrapping things up, Newsmax shares extend their two-day gain to more than 2,000%. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, thank you very much, Bill Maloney. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the drive to the close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, just got about 18 minutes to go until we wrap up the trading day on this Tuesday, April Fool's Day.
Is it, Carol Master?
First trading day of the second quarter. April Fool's? No, it really is. We're off and running.
Listen, as long as it's not the Friday the 13th and you make me say that word,
Triskaidekaphobia?
yeah, then I think we're all good.
March
Go
13th
on.
was a Friday of 2020. That was like the last time we had guests in studio.
Yeah, well, more than 5 years ago at this point.
That's
Lots of
amazing.
Well,
What?
I'm trying to make a segue to like the markets, but I just can't do it because I don't even know.
Sometimes you just got to go for it.
All right, let's bring in Ross Mayfield, investment strategy analyst at the Baird Private Wealth Management. He joins us from Louisville, Kentucky. The S&P 500 today, kind of searching for direction, Ross. I want to get your take on not just today's trade, but kind of how things look in the near future, given the uncertainty out of Washington, D.C. What's on your radar?
Yeah, I mean, you're right. Like, if we're looking for a catalyst today, you're out of luck because of the potential that tomorrow could be. We don't know if we'll get the kind of certainty or clarity that investors, business owners, consumers are hoping for. But it leaves kind of today in the wind a little bit. The thing that I'm thinking about mostly is that this sell-off looks viable to me, presuming we don't enter a recession. I don't think any of the fundamentals suggest we're on the precipice of a recession, but if this uncertainty persists, businesses and consumers can only hold out for so long. So we could well enter a recession, but I don't think any of the fundamentals are suggesting it now.
What are those? What are those fundamentals that you're citing here? Because for every Ross Mayfield, I could go out and find somebody who says, "I'm pulling back right now. I'm really cautious about what's going on. The consumer sentiment data has me concerned."
Yeah, I mean, it's a good point. I wouldn't argue that we're in boom times or anything like that. But I think the hard data and the soft data are diverging a bit. So you have stuff like initial claims for unemployment insurance still hyper low. I mean, we're still adding jobs month on month on month. Real income is up, industrial production is up. Even something like manufacturing PMI today, which wasn't a blowout number or anything to get overly excited about, also isn't signaling recession. The soft data, the sentiment data, the CEO survey data is miserable, but we've seen post-COVID that hard and soft have diverged at times, and particularly in 23 and 24, the hard data went out. The consumer sentiment data was not a useful indicator. So I don't think that it's nothing, but I want to keep an eye on the hard data as well. And if that starts to confirm how miserable everyone is, then we can start to talk about a recession or a real downturn.
How hard is it to put money to work in this environment, especially if it's new money? Do you wait? Do you put it in cash or cash-like investments at this point and just kind of wait for some more clarity, or what do you do?
No, I think this is a great time to invest. I mean, if you wait for clarity or certainty in the market, more often than not, you're going to be left behind. So we know that investing in these big spikes in bearishness, whether you look at the II or the AAII survey, have been very good indicators. Sentiment is totally flushed here. If you look at investing at spikes in policy uncertainty, great forward returns from there. Could it be choppy? Could it be, the next couple of weeks or next couple of quarters even look ugly? Absolutely. We have a lot to work through on the policy front. But if you look a year plus out, I think this is a great time to put money to work. And, stocks are on sale. All of this.
Wait, hold on.
Valuation compression.
Hold on. How can you say stocks are on sale when PE ratios for a lot of people are still, in the S&P 500, PE ratios for a lot of the companies in there are above historical norms?
Well, if you look at like the S&P equal weight, right? So that's like the good representation of the average stock. It's pretty much at its 10, 12-year average. Obviously, some of the big tech companies and growthier companies, they have extended valuations, but they've had extended valuations for 10, 15 years, 20 years, and it hasn't been a reliable indicator on those types of stocks. So you're right. Valuations are certainly not the thing screaming by here. It's more about, to me, about sentiment and uncertainty. But I think relative to the last 6 months, you're obviously looking at stocks on sale. And presumably, if we get the earnings growth that's being forecast right now, I think it'll look like a deal a year from now.
All right. So you did say this is a good time to invest. How much can you drill down and tell us kind of where you would put new money, or just put any money to work?
Yeah, it's a great question. I mean, I think you look at what kind of sector or asset class leadership has been. I mean, I know most of our clients, just anecdotally, are underweight Europe and international at this point. I think that trade has plenty of room to run. I think there are some real structural catalysts there. I'm not willing to go all in, but I think that U.S. investors are probably way underweight international at this point after 15 years of disappointment. So I think leaning into that, particularly in Europe, is a good idea. And then leadership in the U.S. I mean, again, this is partially why I'm not inclined to think we're on the precipice of a recession when you see things like financials and industrials and energy acting so well. So I would lean high quality, and I would stick large cap over small cap given the rate backdrop. But I would still look to good values in kind of pro-cyclical sectors that are acting well here. And I think those, financials are a place where I think really look good, not super tariff exposed, still have a regulatory or a deregulation tailwind behind them, and then are just doing good business right now. So that's the kind of stuff I would look for. I would lean away from getting too defensive at this point in time.
What doesn't look good?
Well, tech still doesn't look very good. I mean, it depends on your time horizon. This is how I talk to our clients about it. It's like, if you have a 5+ year time horizon, then I would be scooping up big tech and AI adjacent names and just riding out these soft patches. But if you have a 3 to 6 month time frame, they look broken.
I just want to make sure. So Ross, I think, how do you know that those big tech companies are going to stay dominant for the next 3 to 5 years? For me, just the DeepSeek news earlier this year, I think, made a lot of people reconsider the sustainability there.
Definitely. It definitely calls into question the hundreds of billions that are being spent on AI infrastructure. But I do think that these companies are largely very fundamentally sound, one. So if you're looking at like the dot-com bubble comp, most of these companies are really cash rich, low debt. Not all the Mag 7. It's not a monolith by any means, but you have these huge companies. You have these wide moats around their core businesses, and then they just have so much capital to play with. And when there's small starts, they tend to just buy them up. So I think that they're pretty defensible here. And again, if I had a 3 to 5 year plus time horizon, I would be grabbing most of these names and not thinking twice about it.
All right, we're going to leave it on that note. Hey, Ross, thank you so much. Ross Mayfield, he is investment strategy analyst over at Baird Private Wealth Management, joining us from Louisville.
Come on, Carol.
Kentucky.
Louisville.
All right, good to check in with them. Hey, just about 10 minutes to go until we wrap up the trading day, the first trading day of the second quarter of 2025, and bouncing around off our highs and lows right now, just up about 12 points on the S&P 500, and Tim up about 0.6% or 110 points higher on the NASDAQ 100. This is Bloomberg.
This is Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, that's that frantic moment that we're having right now. 7 minutes away from the closing bell. We're going to head over to our TV colleagues, get you down on the first trading day of the second quarter of 2025. In the meantime...
Ooh, I got a good story for you, Carol Massar.
What did you find?
The top 10 in the most read.
Drum roll, please.
The Bloomberg Terminal in the last hour.
Ooh, top 10?
Top 10.
What number?
I put it in the chat.
Oh,
number 10.
Number 10. Metro North.
Yeah. Connecticut residents commuting to New York City are getting faster train service after the Metro North Railroad modernized signal systems, helping to cut travel time by 10 minutes on some trains.
10 minutes is real in the morning.
Some infrastructure news.
Good news. Faster service, which started on Sunday, means that some Metro North trains are beating Amtrak's Acela by 3 minutes between New Haven and New York City. The improved service comes after the MTA implemented a new congestion pricing toll to drive onto Manhattan's busiest streets, which is expected to provide $500 million annually for transit infrastructure improvements and renovations.
The transit agency anticipates the new toll will provide $500 million a year. It's going to borrow against that money to raise $15 billion for transit infrastructure improvements and renovations.
Wait, so I'm trying to understand. So,
yes,
is the money already making improvements, or no? This was just happening. Is this just,
I think.
Is this just coinky-dink?
I don't know. They have this technology.
Details.
Using positive train control, it helps prevent collisions in rail simulation. Metro North officials were able to find faster routing patterns. I'm just reading the story.
Okay.
The transit agency also modernized signals across the route, which allows trains to pick up speed.
Yeah.
Sounds like math.
Yeah, the improved service comes after the MTA on January 5th implemented it. Oh, yeah, I'm just trying to understand, like, the connection.
Let's talk numbers here, Carol.
All right, go.
Metro North connects New York City to its northern suburbs in southwestern Connecticut, serving about 230,000 trips on weekdays. That's according to data from the MTA.
So it just sounds like they were working on this stuff, right? So it's not necessarily because of congestion. You're having trouble with the math?
Yeah, I'm having trouble with the math.
Which math again?
230,000 trips on weekdays.
Serving, yeah, okay.
Is it 230,000 people?
Serving about 230,000 trips on weekdays.
I do feel like it would be more than that.
I don't know. It's a little vague.
Math is hard for us sometimes.
Math is hard.
All right, I'll take the L here for picking this story.
But it's not because of congestion pricing that this is happening.
No, but it comes at the same time that congestion pricing
Hence,
for many has
co-winky-dink.
For many has been seen as a positive for the MTA because now they can take out this $15 billion bond and use the $500 million in annual revenue to pay that bond.
But is there causality?
Why are you asking me like I know the answer to this?
Just causative fact.
I've been sitting here with you all day.
If X happens, then Y happens. It's not one of those.
Let's talk tariffs because the number one most read story in the last hour on the Bloomberg Terminal is about how those tariffs are set to take immediate effect. Caroline Leavitt of the White House earlier today, she was asked when these things will go into effect. And she said, I'm going to save some of this for tomorrow. I'm going to let Trump do this.
Yeah.
But my understanding is that
the tariff announcement will come tomorrow.
And they'll take immediate effect.
Yeah, effective immediately. And the president has been teasing this for quite some time. Yeah, telling reporters earlier today. You should remember that Trump said on Monday he had settled on a plan for so-called reciprocal duties meant to rebalance U.S. trade relationships. Leavitt said that the president, who has been known to change his mind on major policy announcements, was meeting this afternoon, could be right now, as we speak, with his trade team to discuss the details. So we could get something still different. We could. He could say, wait a minute, I'm going to hold off on those. Remember, he's taking.
Well, they've already changed the time. It was supposed to be 3 o'clock tomorrow. Yeah. The countdown was on. And then the White House said today, a few hours ago, now it's going to be 4 o'clock. I wonder if it has to do with the markets making this announcement when the markets are closed.
Could be.
I don't know.
Could be. He also had calls with the Mexican president and the Canadian prime minister, right? Didn't they have a conversation? Didn't you talk about that?
The Mexican president and the...
Canadian. They didn't talk to President Trump. Glad you're here to keep it straight.
Keeping you honest, Master.
All right, do not go anywhere, folks. Just a few minutes to go. Wrap up the trading day. Head over to our TV colleagues because the closing bell starts right now.
It starts right now. The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele taking you through that closing bell. A global simulcast starts right now. Carol Massar and Tim Stenovic join us from the radio booth. Scarlet Fu is off today. We welcome all of our audiences across all of our platforms, including our partnership with YouTube. We're 2 minutes, Carol Massar, from the closing bell, but we're 24 hours from a big announcement out of the White House.
I know, I don't know how many times you said tariffs today, but we said it a lot. So we are anticipating that certainly from the White House. You know, the devil's in the details. He's supposed to be meeting the president this afternoon to talk with his advisors to work out the specifics. So who knows what we might get at just about 24 hours from now.
I mean, equity traders are trying to figure it out with today's moves. The S&P 500 is searching for direction. I think everybody's just waiting to see what happens tomorrow. Why do you guys think he changed the time from 3 o'clock to 4 o'clock? Do you think
because
that's
markets are closed?
That's what I'm wondering.
Yeah.
Yeah, I don't know.
Well, because then you have time to digest it before there's any massive stock movements, which raises the question, will tomorrow be a tradable bounce? Will it be a clearing event or a springboard? And how do you position for something like that?
Yeah, we were just talking to Mandy Zhu over at SIBO. She seemed to think maybe not. And based on the price action she's seen in the derivatives and the options markets right now, not a lot of people, at least in that space, are positioning around the announcement tomorrow. But we have to also kind of remind ourselves, we have had a major sell-off over the last few weeks. So maybe that was the pricing in of that risk.
Yeah, you do wonder, right? Oh, sorry.
No, you go.
No, you go.
Oh, okay.
Wow, how sweet is that?
Aw, I was just saying, S&P, worst quarter since September 2022. So maybe a little bounce to be expected.
Yeah, a lot to talk about tomorrow, including that chicken tax and that cheese tax. But today we talk about the markets. The markets searching for direction and a mixed bag that we get the closing bells here in New York. It takes a while for these numbers to settle, but it looks like the Dow Jones Industrial Average is going to close the day unchanged. Right now it's down about 15 points, but again, those numbers can change just a little bit over the next few seconds or so. The S&P is going to finish in the green, up about 21 points, or 0.4%. The NASDAQ Composite up about 150 points, or 0.9%. Similar move higher for the NASDAQ 100. The Russell 2000 flat on the day. We'll just call that unchanged, though you did see a little bit more of a bid into transports as well as into S&P 400 mid-caps.
All right, to the S&P 500 I go. Not quite an even split, a little bit more to the upside. 298 names actually gaining ground on this April Fool's Day. 204 to the downside, Alex, and 1 unchanged.
All right, taking a look at the IMAP here, the function that looks at different sectors in the red and the green. It's all tech, guys. At the end of the day, you have consumer discretionary, communication services, all outperforming, up by about 1%, as well as tech. The downside, though, guys, healthcare. So maybe kind of the safety trade, also healthcare getting weighed down from that Cantor note from yesterday as well. And financials pretty much flat there on the day, Carol.
All right, let's get to some of the individual gainers. I had to talk about Newsmax. I know, again, a bunch of volatility in the trade. Trading stopped because of some of the moves. But you're looking at another day where it just soared 179% to the upside. That's after gaining 735%. We talked about throughout the day that you're looking at, what, a 2-day gain of more than 2,000% at one point. You know, market cap going to, I just need to check, I think it was at $18 billion. So it's kind of interesting. I guess we'll have to wait to see until in terms of earnings when that finally comes out in mid-May to kind of get a feel of the business.
$18 billion?
I know.
Can I just put that in perspective?
Oh, no.
Please.
Warner Brothers.
It's $29 billion.
Okay.
It was 18 earlier in the day.
Let me put that in perspective.
Please.
Warner Brothers Discovery, a much more sprawling media organization, has a market cap of about 26 billion.
I know.
Are you saying it's detached from fundamentals, Romaine?
I'm not saying anything, Tim.
He's just pointing out the facts. He is pointing out
I just
facts
point out
and
the
market
data.
caps.
Data-driven news organization here.
Bailey Lipschultz's story says it's solidified its status as a meme stock. So
yeah, 2,000% pop in 24
Feels
hours,
memey to
36
me, yeah.
hours. Yeah, I'm sure.
Yeah, and it blows away some of the, if you look at something like price to sales, some of the peak metrics from GameStop or AMC. So it's yeah, I had to mention. See, look at all that we talked about. PVH also among the individual gainers today, up about 18%. We broke it down yesterday. If Romaine opens up his closet, if Tim opens up his closet, it's all Calvin Klein and Tommy Hilfiger.
What? No, that is so lowbrow for Romaine. Crazy. Have you not seen what he wears?
I know, he's
Putting me
so
on
dapper. He's so dapper. I think he wakes up looking like that. Don't you think so?
I sleep in
He
this
does.
seat.
He
100%
promises
agree
he's
with
going
that.
to teach me how to tie a bow tie, but it hasn't happened yet.
Keep waiting, keep waiting. Anyway, the company gave a guidance for 2026 adjusted earnings that beat the average analyst estimate. And then, guys, I had to go to Tesla because this one, at one point during the day, was the top gainer in both the S&P 500, the NASDAQ 100, finishing the day with a gain of about 3.6%. And this is despite sales falling almost 40% in France last month. We continue to see bad sales numbers, especially when it comes to Europe. I don't know. So there we go. Still down more than 30% year to date. But again, this was an outperformer among the Mag 7 today.
Can I just add an honorable mention on there? CoreWeave. Did you see what that did today?
I did. Oh, I missed that.
42% rally today.
How did I miss
Now at $52. Remember, it had a pretty middling debut on Friday. Sold at 40, opened at 39, closed at 40. It was down yesterday, and today, for some reason, a 42% pop.
Why? Do you not know?
I don't know. I just bring you the facts.
He knows everything.
I'll let you guys do some research while I do my decliners
What are you
here.
doing, Tim?
I'm looking at shares of Johnson & Johnson. They had their worst day going back to 2018. This after the company's plan to settle thousands of those talc-related lawsuits through bankruptcy was actually rejected in court. Shares fell 7.6%. So this means that the company will have to fight about 60,000 claims in courts across the country. Also, shares of Delta Airlines, and really a lot of airlines taking a hit today. Delta fell by 2.7%. Jefferies cut Delta to underperform from hold. Uncertainty around consumer and corporate spending. Sheila Kayalu over at Jefferies expects American, Air Canada, Southwest must cut their annual forecasts. And then she says Delta is likely to cut its annual forecast. Once again, shares down by about 2.7%. I'm also watching ADRs of Xiaomi. They fell after the company confirmed that one of its SU7 EVs was involved in an accident on an expressway in China that resulted in 3 deaths. Shares fell 5.8% today. The accident sparked concerns over the safety of Xiaomi's smart driving software, and it could impact the company's competitiveness and growth outlook, particularly in its EV business. Once again, ADR is down by 5.8%.
All right, guys, if you want to go get some safety, you go to the bond market, and we saw that in full display today, particularly on the back end. At one point, you would yields down as much as 10 basis points, but they closed up by about 4 basis points lower, 4. Oh, my God.
I have no idea what she's trying to say.
Alex, 3, 2, 1, go.
I did it. There we go. This happens when I talk too fast. All right, anyway, point is that there's a bit into the bond market, mostly the back end. My question is, though, if we see more inflation kick up, when does the bond market then become less appealing as a safe haven, because then you're factoring in the inflation, but those break-evens are still relatively well-behaved?
Yeah, and it's kind of interesting, too. I mean, when you look at this, I mean, this does not scream panic. Yes, some people are flocking to the bond market, some people in options, but as Mandy Ju just said, you're not really seeing a wholesale positioning for, I guess, deep risk, if you will. And you brought up just a little bit a while ago there, Tim, the downgrade that we saw over at Jefferies, and we were speaking with Sheila as well. You know, this is about what the airlines can now do to maybe potentially mitigate a potential drop in passenger traffic. Like, what can they do to bring people into the airports and onto those planes?
Does it have to do with hamburgers?
Nice.
No, you were doing that?
Yes.
That was very slick, actually.
Yeah.
Maybe they could do that. Okay, so one of the most read stories today is from our Bloomberg Business Week team, Brooke Sutherland and Mary Schlangenstein. They're talking about the first class perk on some Delta routes includes Shake Shack burgers. No, not fries yet. They haven't figured out how to do fries. But apparently...
I have thoughts on this.
Okay, what are your thoughts?
Let me just preface this, say I love Shake Shack.
Okay.
Is that a first class meal?
Yes.
Have you been on an airplane in the U.S. in the past few years?
No hesitation by Alex.
I mean, or would you prefer the really gross couscous with the salmon on top that just was microwaved?
Yeah.
Ouch.
It does beat some of the in-flight options that I have eaten in recent years.
Yeah.
I will say that.
Okay, well, you got to fudge it a little bit. Just, tell them you're kosher or halal or something. You get a little bit.
What's your meal of choice, Romain?
I'll just lie, Tim.
Just saying.
I don't know. Honestly, I take what I can get these days on airlines. I just keep my mouth shut because I don't want to get thrown off or something.
We did speak to Mary a little bit about this, and I think it's fair to say, like with the big 3 airlines, American, Delta, and United, when it comes to that first class hard product, right? They're very similar. So if this is a way to differentiate, see what United and American have to do.
Yeah, no, I agree. Absolutely. I mean, you have to try something to kind of stand out from the crowd, and maybe this gets it there. Another interesting story that I came across this morning. yesterday, and I was kind of confused by it. Did you know people are flocking back to Tumblr?
I thought this.
So two questions. A, I didn't know Tumblr was still going. And two, I don't know. Apparently it's still going, but apparently a lot of younger people are kind of fed up with a lot of the social media platforms out there. They say they just don't really offer the engagement. And they're finding it back on Tumblr. It's like everything old is new again.
Love it when we talk about young people as if we know what's going on.
Hello, fellow kids.
There's a line in this story by Business Insider says part of the reason young people are hanging out on old social platforms is that there's nowhere new to go. How about going outside and doing something?
Now you sound old. Who's old now, Carol?
Get off my lawn.
All these kids just in the house all day.
Wait, but does this also go to the whole point of like Meta was trying to get back to like the OG Facebook, where it was just friends and hanging out versus all the other recommended ads and stuff?
Going somewhere with someone.
Okay.
I don't like talking about
Not all of us have yachts that we can just take off
it's
on
true.
into the wild blue yonder there, but you know.
All right. Q, we gotta go.
No, she's saying we can keep talking. We can say.
All right, that is a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We do call it the closing bell. We will see you again, same time, same place tomorrow, guys.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is Bloomberg Business Week. Carol Masser alongside Tim Stenivek. That's Carol. I'm Tim. And Carol, you've talked about this a lot. Small and medium-sized businesses just helping to power this economy. According to the U.S. Chamber of Commerce, small businesses in the U.S. are responsible for providing employment for about half of the American workforce, and they represent more than 43% of the GDP of the U.S. So understanding small businesses gives us a good idea of how the economy is doing.
We love talking to the space. Mark McCaffrey has a great read on all of this. He's the CFO of GoDaddy, which provides a broad range of online services for small and mid-sized businesses. Think internet domains, website hosting, and so much more. The company, by the way, has a market cap of close to $25 billion, so it sees a lot of small businesses, and it serves more than 20 million customers around the world. Mark, nice enough to join us here in our Bloomberg Interactive Broker studio.
You're not wearing any Goggins goggles.
Oh,
what is going on?
You saw our little promo today.
Oh, I saw it. Yeah, I saw it.
Walton, he's a big fan of ours, right? Obviously got us back into the Super Bowl and everything. But you know, he's an entrepreneur. You know, he is an entrepreneur.
Does he really make these classes?
He has many ventures that he has gotten into through his life. And when he came up with this idea for the goggles, we just thought it was the perfect match for us. Here you have a great actor who is passionate about small businesses, wants to launch this goggle idea. And, you know, we breadcrumbed it out through the whole fall. He started with announcing it on social media, got a little buzz. We started with announcing that we're going back to the Super Bowl, got a little buzz, and then we tried to drive everybody to connect that he was going to be our new spokesperson, and he is fantastic.
So what's the ROI on that?
The ROI, you know,
he costs money.
Oh,
a Super Bowl ad costs money.
Super Bowl,
I saw he was at the New York Stock Exchange today. He's not doing that for free.
He is standing up there ringing our bell today because it was our 10th anniversary of being a public company. But when you think about where GoDaddy was as a domain company and where we are now as a one-stop shop for entrepreneurs, we need to get that message out. Like we have such useful tools for the mom and pop shops to now do business not only on the corner but in social media. They want to do professional emails. They want to do marketing campaigns. We can handle it all for them, and we did that with Walton. Like we handled all his platform for him so he can get out there and sell this. So you know, hey, we've been around for a while. This is a long-term play. We're not going anywhere. We have a great company that grows. We're profitable. We generate a lot of free cash flow, and it's because we have such good retention with our customers. You look at our ARPU, it's just over $200 for an entrepreneur, a micro business. That's a good deal. We provide a lot of value, and that's why they keep coming back.
So remind our audience, though, in terms of churn and stuff, or that once you get a customer, how long do they typically stay with you?
So they'll stay with us. If we get them to a second product, our retention almost goes through the roof with them. If we get them to a third product, we have a customer for life. And that's why we have this compounding element of cash flow. People just keep renewing. So we say our average, is around 85%. But if the longer they stay and the more they use our tools, or if they engage with our care guides, you can actually talk to a live person with us in our care organization still. And when they engage with our guides, that lifetime value just goes up. So we always use the statistics when we're out there talking. If you assume a domain is 1x, if we can get someone from a domain to an email to a website and then to transacting, it's 83x LTV for us on our customers. And we do that because we focus on our customers. Like, this is the place we go to. Like, we know this customer.
Let's talk AI. Because you guys have your AI platform, GoDaddy Aero. When are we going to see it start to make an impact on ARPU?
So we're starting to see the beginning stages of the monetization. And again, we are a long road. We're not in a rush here to get to a certain place in a short period of time. We're taking our customers from discovery to engagement and then ultimately to monetization. And that starts to show up in our renewal rates. Now, we just launched this recently, but when you think about it, 20 million customers, we have out there. This is our platform. It's consolidated. And we're starting to see our average order size goes up. We're starting to see our upward. Now, for us, remember, it starts with bookings. And then over time, it becomes revenue, and that's the point that it starts to hit our ARPU.
Okay.
So it takes a little time to get in there, but what I always say is, hey, this is about the long-term play, us supporting micro businesses because we want them to continue to be successful. If they thrive, you gave some great data out there. If they thrive, we do great.
Well, are they thriving right now?
Well, so this is a very durable, optimistic group. They always feel good about what they're doing. And you know what's amazing about this group too is even if they do hit a failure point, they generally...
They felt good during the pandemic?
They felt good during the pandemic. They were optimistic.
Great financial crisis?
We actually see some of our numbers go more into entrepreneurialism when you're trying to do a side hustle or a side gig, or you want to start selling. I always joke. My joke is, if I want to sell my baseball cards all of a sudden and make a side business out of it, I have to do that somehow. So this is a group that is just very optimistic. Doesn't mean they're always confident in the economy, right? But they are optimistic in their chances to be successful in doing what they love.
So they're willing to at least make that first...
Yes.
To get their business going.
Yes.
I mean, so what insight do you have, especially among your customers who are repeat customers, stay with you, expand their services with you? I mean, that's a better indicator perhaps, right? In terms of what they are seeing about the economy. What are you seeing from them? What are you hearing from them?
We are hearing that they want more help reaching different channels, audiences themselves. So you think about it, right? You're maybe selling in your local town. Well, now social media becomes a platform. But if you're, I ran into a customer and she was panicking because her daughter was going off to college in a month and her daughter did all her social media campaigns. So we have a tool that literally takes all the inbound emails coming in from all the platforms, creates an outbound marketing campaign for you, and it'll do it based on, whatever these are the type of tools we provide, and this is what they need. They need it all to work, because you're not talking about a sophisticated customer group or
right. But that is more of like, my daughter is going to college and now I need to do it. But are you seeing any signs of stress? Because, as Tim said, Mark, coming into it, small business, medium-sized business, but small business, the backbone of what we do. Yeah. And so when there's some stress, and we've seen it in business sentiment surveys, cutting back on CapEx, consumer sentiment as well, another side. But I mean, I'm just curious, are you seeing any signs of stress or holding back a little bit?
We haven't seen any signs of that coming out of 2024. Now, I will say...
In the last couple of weeks?
Yeah, so we'll get out there with this current year when we have a chance to get out there. But, you remember, we are actually engaging a lot of these entrepreneurs before they actually become a small business. That's why we use the term micro business. And that micro business is still trying to get out there and do more right now. What we saw coming out of 2024 is the demand at the top of the funnel. And remember, a lot of people just come to us for a domain name.
Right.
Is still healthy. It's still very, very much healthy.
And that's still the bulk of your business?
It's a lot of our business. Yeah. But that attach, is going up for us, which means they're coming in with intent. And if you come in to get a domain name and you have an intent to do something, that is a great sign for us.
But I'm curious about how you grow from here, because the customer count has seemed to plateau a little bit, and this market is only so big. What do? Do you go up market?
No, listen, we have a right to win where we are in the micro business, and we will continue to.
So this is
on
like fewer than 10 employees, micro business.
Yeah, micro business could be around 10, maybe $1 million a year, that type of business. This is where we have a right to win. This is the customer we know. I say in technology, two things you always have to be able to do: innovate and know your customer. And we have the ability to do it in this market. And listen, we generate a lot of free cash flow, and we have a strong balance sheet. We just hit 10 years as a public company. We are so excited about the next 10 years and our ability to keep this compounding on it. Why? This group needs these tools to be successful. They need to know how to use technology, and they can't be dealing with 8 applications at night trying to figure out which one isn't working or working. They just deal with us.
So you're about 21 million customers, right?
Yeah.
How do you kind of grow beyond that, or what are your expectations? Because it does seem like you've plateaued a little bit.
Yeah. So
get some of the research.
We have focused on, hey, we call it profitable growth. And so making sure that we are continuing to drive profitability and grow at a steady rate.
So you would rather keep that base and make each of those customers more profitable for you?
Yes. Right. And you think about it, we for our customers, there's 3 levels of it. There's the new customer just coming in, which we have the ability to sell them products and then attach. We have our existing customers. We have a lot of existing customers, and our ability to get them to even attach currently is a great opportunity for us. And you think we launched commerce a couple of years ago.
Right.
And our ability to convert our existing base over to our commerce platform has been allowing us to drive GPV within our model, again, because we know this customer.
How do you look at the relationship between you, the websites that you host, that you have, and also social platforms as they increasingly get into commerce? Is a website still going to be the primary digital platform in the age of social and in the age of AI?
Yeah, so for the entrepreneur, for the micro business, their ability to go across multiple platforms is just needed by them. They can't focus on just one platform.
So you're saying, yeah, they might have the TikTok shop or the Instagram, whatever it is, but they're also going to have their landing page that's hosted by you.
They're going to need their landing page because they're going to have to go to more platforms. And by the way, when they have their own website and landing page, they can use that data to determine where they want to go next, what is more profitable. Every social media platform is going to have their own metrics of how they sell. There's nobody out there on a platform that actually just gives them the data they need in order to be successful. And that's what we do. And that's why we service this market.
Last question. What worries you when you look at the environment right now?
Yeah, so there's a lot of unpredictability out there. Now, we have felt really good. We've been around for a while. We've been around for almost 30 years. We've gone through economic crises and different cycles. Everyone is a little different. And we've been able to watch as entrepreneurs have managed through this. We saw the financial crisis. We saw a lot of new business formations during the financial crisis in 2008. We saw unemployment go up at the same time. This time, as we went through, we didn't see unemployment go up as high. You didn't see the same reaction in the entrepreneurial business. Everything went fine, but everything has a reactionary difference as we go through different markets, and what worries me is making sure that we're watching all the signals to see how they may have a downstream impact, and not just trying to focus on one of the signals. And when you watch all of them, then you can start to pick up a little bit of, okay, how is this going to hit that mom and pop shop down the block? They may not be able to hire somebody like they wanted to, but maybe we can provide them a tool now that allows us to do that. So we feel we have to constantly be out there watching that market, feeling them, meeting the customers, seeing what's working for them, and hearing them. So again, coming back to that relationship with that customer group becomes just very, very important to us.
Yeah, that sounds certainly, especially with so much coming at business owners right now.
Yes.
It's a lot. This was fun. Thank you.
Thank you. This was great.
Yeah.
Thank you for having me.
Yeah, thank you. Congratulations. 10 years?
10 years. Public company.
Mark McCaffrey,
All right.
CFO of GoDaddy, joining us right here in studio.
Hey, let's get an update on everything happening after hours and how the market's closed. Here he is, Charlie Pellett.
Hi, thank you very much indeed. We are looking ahead to Tariff Wednesday. And yes, complete coverage on Bloomberg television and radio throughout the day. Indeed, we've got a special 2 hours of coverage tonight on Balance of Power beginning at 5 o'clock Wall Street time. The Dow lower, the S&P, NASDAQ both higher today. 21-point gain on the S&P. 56.33 where we ended the first trading day of the second quarter. A gain today of just about 0.4%. Dow Industrials lower by 11, down less than 0.1%, while the NASDAQ Composite Index was up 150 for NASDAQ today. That was a gain of 0.9%. 10-year yield at 4.16%. The 2-year today yielding 3.87%. Gold down $5 the ounce right now, down 0.2%. Spot gold 31.18 the ounce. West Texas Intermediate crude down 0.4%. 71.22 for a barrel of WTI. And Bitcoin up 3.1%. 84,995 right now on Bitcoin. Conservative media outlet Newsmax having a meme stock moment today. Shares surged again. Today, Newsmax was up another 179%, building on that 735% surge in its debut session yesterday. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, everybody. Thank you so much, Charlie. We turn now to the healthcare world. First up, the U.S. Department of Health and Human Services started dismissing workers early this morning, carrying out Secretary Robert F. Kennedy Jr.'s goal to shrink the agency. Now, the layoffs align with a plan to eliminate 10,000 employees from the agency's workforce, which will reduce the agency's staff from 82,000 employees to about 62,000 workers, Tim. So that's quite a haircut.
Meantime, as we continue our focus on tariffs, the president is planning to impose tariffs on pharmaceuticals, which could raise prices, lead to shortages, and strain healthcare providers. The tariffs, Carol, would particularly affect generics.
Yeah, so there's a lot that we are thinking about watching, and so too is our team. We're going to bring in two members of our healthcare team, Bloomberg News health reporter Madison Muller, excuse me, along with Bloomberg senior pharmaceutical analyst Sam Fazeli, both here in studio. So Madison, let me start with you. We are thinking about what's happening in Washington and what this all means. How are you guys, and I want Sam to weigh in too, but let me start with you, Madison. Like, how are you thinking about what's happening in Washington and how it impacts the space that you report on day in and day out?
Yeah, I mean, these changes are huge and sweeping, and I think we're still grappling with the impacts and who's affected and how this is going to affect the industry. And the industry is grappling with that right now too. I mean, we are still, like, information is trickling in still as we're trying to figure out which divisions are being, cut, who's being laid off, exactly what it is being impacted. And so that's something that's, like, the information is still actively coming in.
What's the relationship, Madison, with the government, public health, people who work in the government, and then the private sector and the development of drugs that ultimately get put into the pipeline and approved years later? What do we know about that relationship and how one affects the other?
I mean, they're critical. They work together in research, in drug approvals, drug development. Like, the government is so important in all of that. Obviously, the FDA, the U.S. Food and Drug Administration, is viewed as sort of the gold standard regulatory agency for approving medications in the world. Wow. And a lot of other countries look to the FDA. The FDA is usually the first to approve drugs. Americans are typically the first to get access to new innovative medications. It happens more quickly here. And so I think, other countries, other regulators are also looking at what's happening in the FDA, in the U.S. and at the FDA, and thinking, how does this impact us as well? We have companies this week that are, have PDUFA dates that are expecting drug approvals. And
what's a PDUFA date?
That is sort of an expected drug approval window, and Sam could probably speak to this more, but we sort of use that to gauge when drug approvals are going to happen. We'll see what happens with those. It's kind of all up in the air right now.
It's just this stuff that we just take for granted, right? That it's just going to work because it's just the world that we've lived in, grown up in, and seen for multiple generations. Sam, I thought about when we were going to have this conversation with the two of you, how many times throughout COVID we reached out to you, and I would listen to you early in the morning, with either our surveillance team or other teams. But, like, how are you thinking about what you're seeing happen in government and what it might mean for us in terms of healthcare in the United States?
Ooh, how long do you have?
We got a little bit of time. This is radio. We can hang. We can hang.
But I am thinking, these things that we take for granted.
HHS, the Health and Human Services, which is run by RFK Jr., it runs quite a lot of these important institutions, or at least decides their budget, etc. So CMS, Centers for Medicare Services, so that includes Medicaid, Medicare.
Right.
And medicine step in anytime you fancy, right?
Yeah.
You've got the FDA, which we've just been talking about, and you've also got the CDC, etc. So pretty much the health of the nation is in the hands of this institution. And they have to decide whether they want to continue to support vaccinations and be, for example, very positive about saying you got to go and get your vaccines, and not say, but it's a personal choice. Because vaccines don't save lives. I've said that this morning also. Vaccinations save lives. You got to get it in the arms. If only 80% of people take it, remember herd immunity and all that?
Yeah, totally.
For measles, that's critical, which is why you're seeing these pockets.
Sam, you're here visiting us in New York, which we love. You're usually in London. You spend a lot of time in France. You have this global view. As Madison said, the FDA is the gold standard for approvals. Does the world have to look somewhere else? Does it have to look to the NHS? Does it have to look to another regulatory body now?
I think I'll come back to you with the word uncertainty. I don't know. I don't think so.
I mean, is there an
not.
institution out there that is akin to
the European Medicines Agency, the MHRA in the UK? They are all great. MHRA is one that does its own assessments. The Europeans tend to, or at least, and maybe the UK also tend to rely on the depth of work that the FDA does. The FDA literally rolls up its sleeves and looks at raw data and makes its own analysis. Then the companies present.
That is so interesting. So come on back in, Madison. Like I do think about like collaboration, right, on a global scale.
Right.
What typically happens? I mean, again, these are things that I don't think anybody ever thinks about. But I'm assuming that there is data sharing, especially when it comes to important medications and so on.
Yeah, and I mean, even with vaccines, like you were talking about, we've seen some back and forth of there are global regulators and health experts that meet to decide on what the flu vaccines will be for the season. And we saw some pullback with the U.S. deciding whether or not to attend this meeting, which has happened, every season for I don't know how many years, a long time.
Decades.
And so, yeah, decades. And so there is so much collaboration that goes into it, and whether or not the U.S. is going to be participating in that going forward is a question right now, because we don't even know who's left at the agencies, quite frankly, at this point.
So we did have that uncertainty.
Yeah.
And at least a little silver lining is that they did decide. They did fall in line with what the WHO said. They looked at their view. And so we now know what we're all hopefully going to get for our flu vaccine this coming winter. So things do happen. And the FDA, let's face it, is causing major uncertainty. You look at the share prices for biotech companies, pharma companies, they're all falling. Pharma on top of it has got this tariff issue, which I'm sure we'll talk about. The interesting thing, of course, is that the FDA isn't infallible. They have done things that we've all both questioned in the past 5 to 10 years. However, it causes uncertainty. We don't know what shape this FDA is going to be when it comes back to life.
And this is what's just one thing I wanted to bring up. To be fair, I think there are some that would say with certain drug approvals or certainly for testing or for people who maybe have no other choices, like there are things that could be better. And I'm assuming that you both would agree that there are some improvements that you could make in this department. It just feels like things are being done in an uncertain way, in an uncomfortable way that it's not necessarily helpful.
Right. And I think the part of the problem is, I mean, RFK has said, and this administration has said, that obviously these cuts and sort of restructuring is a priority, and RFK has laid out a restructuring for HHS, but the bigger picture of what exactly they're trying to do here is not clear, and I don't think that has been communicated to the public, not to us, not to people, staffers at these agencies. So people are just kind of like, what's going on?
We're going to talk about the tariff issue in just a minute, but I want to get one more question in to both of you before that. Madison,
I forgot we were supposed to talk about that.
Yeah, I know you did, and we're going to get back there because I teased it, so we have to. Madison, you went to the JP Morgan Healthcare Conference in San Francisco, middle of January. You came back here and you told us there was this optimism about M&A. There was optimism despite the fact that RFK was coming in. Fast forward to yesterday, Cantor Fitzgerald biotech analysts slammed the leadership of RFK, calling on the Trump administration to reevaluate his role after this top vaccine official stepped down. This is Cantor Fitzgerald. This is Howard Lutnick's firm that we're talking about, the Commerce Secretary. Is that optimism still there?
I mean, that was a really striking comment, and I think departure from what we've seen in sort of these more like soft comments, soft criticism.
Yeah.
I think people are being really careful with what they're saying publicly, and they're not saying that they're not optimistic anymore, but there are concerns about what the greater plan is and what's happening, obviously, at HHS, what's happening with tariffs. And I think that some of the power and influence that these companies and trade organizations, and I'm talking about pharmaceutical companies, have had in the past is being tested. And, you know, they thought that they were going to, you know, be talking about the Inflation Reduction Act and IRA and drug pricing with the administration, and that has not been the priority so far. And, you know, I think this administration is moving fast, and the companies are sort of scrambling to keep up.
Go.
No, I mean,
I'm curious what you're hearing from global companies too.
The problem with biotech is more than just this recent issue. It's been what, 4 years? Every JP Morgan, I felt just a little bit of a twinge of optimism, and you come back and things fall apart. But the reality here is that this is the peak of uncertainty at the minute. Maybe it's the peak of uncertainty. Let's see.
Okay, let's get to tariffs. In the couple minutes that we have left, Madison, you wrote about it. Sam, you were quoted in the piece. You've done research, Sam, on this. Excuse me, different Sam. That's okay. But you still study this closely. I'm like getting my Sams mixed up.
There's a lot coming at us.
There's a lot coming at us. Tomorrow, 4 o'clock. What do we have to know about the way generics could be affected with this?
Yeah, so the reason generics are particularly at risk is that they have very little margin. They price low. Like big pharma companies have got a lot of profit. The prices are high. They can usually eat the tariffs and not put the prices up. Whereas generics, you know, the whole point of a generic is that you end up getting some of these drugs eventually for cents on the dollar per pill. And once you get hit by a 25% increase in your basic cost of goods, so you know, your raw material or your active ingredient that goes into it, then it eats your margin. So you can't help but pass that price increase on. Whereas in the world of large pharma with more expensive, more highly valued branded drugs, you can absorb some of that. It does get your EPS hit, but nowhere near a BMW or a Mercedes-Benz with a halving of EPS potential forecasts. Maybe 2 or 3%, depending on how they're calculating their transfer pricing, etc. When something gets manufactured in Ireland, gets transferred here. So they're exposed, but nowhere near as much as the generics.
I am curious, just one last final question that, you know, you guys are talking to companies, people in the industry, and I just think about the stuff that's coming from government. Let me ask you first, Sam. I mean, are people able to, even companies, able to access the White House, get to the administration, find out what's going on? Are they getting, I know there's a lot of uncertainty. Are they getting any information about like kind of what's coming down?
Trips to golf courses, and I think there've been a good few dinners. I think there is communication. The problem is you can be communicated, but the direction changes the next day, or there is a tariff. No, there isn't a tariff. Some will be exempted. No, they won't be. You know, it's very hard to plan. However, all the companies are really taking it in their stride.
Yeah, I do get a little nervous about, we've talked about companies cutting back on like CapEx, but you wonder how much that might potentially slow down some R&D of just not wondering how the system is going to work or not work. God, this is, I think, my favorite moment of the day. Thank you.
You say that to everyone.
I will. I will.
She doesn't. I promise.
No. Oh, I don't say that to everyone, but I will tell everyone. You guys, thank you so much. Really appreciate it. Important story, important to the country. Bloomberg News health reporter Madison Muller, along with Bloomberg News senior pharmaceutical analyst Sam Fazeli. Don't go back to Europe.
How long are you staying with us?
Until Thursday, 21:30.
Okay, we'll get you back.
Thank God you'll be here for tariffs. We'll need you.
Rock stars, truly, so appreciated. All right, let's get to another area that has been on the radar, Tim, of the White House.
As we've reported, the Trump administration is ramping up its fight with America's elite colleges, including Princeton University, which saw funding freezes on several of its research grants. Bloomberg News correspondent and host of the Big Take podcast, David Gura, sat down with Princeton president Chris Eisgruber to talk about the pressure his school and others are facing from the White House.
We had notice actually yesterday of the suspension of some funds, and are still seeking a clarification of exactly why these funds were suspended. So there's no respect in which we're immune from this. As you know, from our standpoint, this compact is important to us, and I think it's important for universities to stand shoulder to shoulder as we go forward.
It's funny, in my job, I've talked to a lot of foreign ministers about the threats right now that are happening with regard to trade policy. And I keep asking each of them a very basic question, which is, do you know what you would need to do to satisfy the demands of the U.S. government? And I'd love to put a version of that question to you, which is, so you're having these funds being reviewed, it's happening in other institutions as well. Is it clear what you would have to do differently to have them unfrozen, or is it still something that's very much uncoated or unclear?
Well, in the case that I just described, it is unclear to us. But I also think there's a different way of asking the question, at least for an institution like this one. The question is, you know, what do you do when you have funds frozen in this way? And that depends on the rationale or the justification that the government is giving for its decision. But I think the following things are clear, right? We have to comply with the law. If there's an allegation that there's some kind of unlawful behavior, we have to change that. We have to stand steadfastly against anti-Semitism and all other forms of discrimination, and we will cooperate with the government to address those if that's their concern. But we will also continue vigorously to defend academic freedom, and we will insist on the due process rights of the university. So I think the range of options that a university or anybody else has under those circumstances are, first of all, to litigate if there are concerns, to address legitimate concerns where they exist, and to continue to work with the government to address and move forward on what I think are shared goals. And there should be shared goals here of making sure that the United States continues to be the world leader in research and innovation, making sure that we address all forms of hate or discrimination on our campus, and making sure that we conduct research lawfully. So those conversations I think we can have. You know, there are other people who urge, well, are there other ways that you can accommodate the government in some way, or bend to the government's policy preferences in order to restore funding? I think that's the wrong way, at least for an academic institution, to be thinking about what its responsibilities are. We need to be true to our mission, and we need to be true to our values.
Well, there you have it. That's Princeton President Chris Eisgruber speaking with Bloomberg's David Gura. That full conversation will be available in the latest edition of the Big Take podcast. You can find it on Apple, Spotify, and all of your favorite podcast platforms.
All right, if you're just joining us, just a reminder here on Bloomberg Business Week, how we ended up the trading day. And it was the first trading day of the second quarter. Markets bounced around, and we definitely finished off our lows of this session, but just a little bit higher on the S&P 500, up about 21 points. The NASDAQ 100, we did see the Mag 7 names at one point, and I think finishing the day all higher. Tesla really the outperformer there, but the NASDAQ 100 was up about 0.8%, so that was good for a gain of 157, almost 158 points. And we finished near our highs of the session today.
All right, we'll see what tomorrow brings with the tariffs.
Yeah, I mean, listen.
I think investors, there wasn't a clear direction in today's trade.
No.
I think investors are waiting to see what happens tomorrow, what's announced, what has been telegraphed versus what actually gets announced.
No, that's such a good point. Reciprocal tariffs, what do we get? You know, do nations then react? But the point was, I do believe the president was having a meeting with his advisors. We've been reporting that out. Some conversations to talk about exactly what they want to do in terms of tariffs. We know thus far into the second Trump administration that things can change, and can change either on an hourly basis or on a daily basis, on a weekly basis. So this is why I think a lot of folks are in a wait-and-see mode in terms of what we get.
Hey, let's get an update on how things are looking after hours, news, and of course markets as well. Here he is, Charlie Pellet.
Thank you very much. And here's what's going on. Developing story: President Trump will be considering a final proposal for TikTok tomorrow. This, according to CBS, citing sources. The administration said to be finalizing plans for potential potential investors that could include Blackstone and Oracle. Again, this according to CBS. Well, as we've been reporting, turned out to be a mixed day with the Dow lower, the S&P, NASDAQ, both higher today. We had the S&P up 21, 56.33, where we ended the first trading day of the second quarter. This ahead of Tariff Wednesday. We've got the Dow down 11 today. Little change there, down less than 0.1%. NASDAQ up 0.9%. The NASDAQ 100 index up by 0.8%. The Russell 2000 index just about flat on the day. The 10-year 4.15%. The 2-year 3.87%. Spot gold little change, down 0.2%. 31.18 the ounce. And West Texas Intermediate crude down 0.4%. 71.20 for a barrel of WTI. Bitcoin up 3.2%, 85,049 on Bitcoin. So certainly we are looking at mixed markets here with the S&P higher, but after all of this selling, what about the market backdrop? Ross Mayfield is investment strategist at Baird Private Wealth Management, and he was interviewed right here on Bloomberg Business Week Daily.
The thing that I'm thinking about mostly is that this sell-off looks viable to me, presuming we don't enter a recession. I don't think any of the fundamentals suggest we're on the precipice of a recession, but if this uncertainty persists, businesses and consumers can only hold out for so long.
Ross Mayfield of Baird Private Wealth, interviewed on Bloomberg Business Week Daily. Well, tomorrow we find out about those tariffs, so we'll have complete coverage on Bloomberg Radio. Speaking of which, we got a 2-hour special of Balance of Power tonight beginning at 5 p.m. Wall Street time. Auto stocks mix, GM higher today by 0.5%. Ford ahead of tariffs down 0.9%. Stellantis, parent of Jeep, Chrysler, Fiat, among many other brands, down 1.1%. And Tesla, part of a broader tech rally today, Tesla up by 3.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. We've been talking about tariffs, and we're already seeing companies react ahead of this announcement tomorrow. Mercedes-Benz considering withdrawing its least expensive car from the U.S. Cocoa and coffee futures climbed on heightened supply fears as attention shifts to potential impacts of a trade war on ag markets. Just a couple of headlines. I deleted some because we don't have time to get to them all, but there's a lot around this.
Yeah, and we have a great guest to talk all about it. Brad Carson, he does think about tariffs on high tech, specifically data centers and other infrastructure use that are used in AI tools. He is the co-founder and president of Americans for Responsible Innovation. And their mission is to, quote, help U.S. policymakers develop a thoughtful governance framework for rapidly advancing technologies that protects the public from harm while continuing to foster innovation. He's also a former congressman, served 2 terms in the House as a Democrat in Oklahoma's 2nd District. He's a veteran, worked in the Obama administration, general counsel of the Army and undersecretary of the Army, among other roles. In other words...
Yeah, we're out of time, Brad. Sorry.
You come at things from different perspectives, which is what we always like to talk to. Brad, talk to us about tariffs and how you're thinking about them as we get ready for what's to come in less than 24 hours.
Well, great to be with you. And as you said in our mission statement at ARI, we want to be thoughtful, and tariffs have trade-offs. And when it comes to AI, there are some real negative effects, possibly, of our race to build giant data centers necessary for the next generations of AI, because Chinese parts, as well as parts from Mexico and Canada, are really essential to that what's really exponential growth in building these kind of massive data centers. So it's going to increase the cost, probably slow down the progress, and that is one of the trade-offs that policymakers should be thinking about.
Mexico and Canada, not usually on our radar when we think about the high tech. It's usually China. It's usually overseas. What is it?
Well, we import more IT equipment from Mexico at $43 billion a year than we do from China or Canada each, which are about $30 billion a year. And so there's a lot of kind of IT equipment coming through all of those nations, certainly on the high-tech end. You do think of China or South Korea, Japan. But a lot of the equipment, construction equipment, the racks, servers like that, could come from China, but also from Mexico and Canada. So all of those countries will be affected by the tariffs, and it will certainly affect what will be, we're talking data center construction costs that are $50, $60 billion aspirationally from the big companies like Google and Amazon. So these are very expensive projects, and the costs could go up 3 to 5%, maybe even more than that.
I'm curious how you look at the U.S. versus China when it comes to this technology. How would you characterize the race, the AI race between these two countries? Who's winning right now?
I think the U.S. is winning, and we're likely to win. And I think the gap between the U.S. and China, which today might be 6 to 12 months, is likely to grow over time as the various export restrictions, which will keep China from accessing at scale the chips necessary to produce the so-called frontier models, they begin to have more teeth. And so the U.S. is in the lead. The big labs in the U.S. are where all these products are being developed, and we need to make sure we keep that lead and that it's not stolen through espionage. Cybersecurity protections are critical to U.S. labs, so we can maintain the technological lead that we will develop in the United States.
Wait, what makes you so confident that the U.S. is going to hold its lead here?
Well, the big input into it are, of course, chips. And the chips are where the export controls will restrict China's access to them. And so over time, again, there's a lot of cheating and kind of subterfuge on those, but the U.S. is going to dominate that chip market. So that's part of it. We have the best engineers in the world here. The big labs, OpenAI, Anthropic, Google, Meta, right, are U.S. companies, and they're likely to continue to be at the very frontier of that. So we have the best chips, we have the best engineers, we have the best culture in which to develop these kinds of things. And so I think, unless we really mess it up, the U.S. should maintain a lead that others could steal, perhaps to match, but are unlikely to kind of natively develop on their own.
Brad, you spent 4 years in the House serving your constituents. You also spent quite a bit of time in Washington during the Obama administration. Are you in touch at all with your former colleagues in the House? And if you are, do they get this?
I am in touch with my former colleagues a lot. I go up there, a couple times a month, often to talk to them about AI issues. And they're not really, I think, aware of the effect of the tariffs on AI. And AI itself is just becoming an issue on the Hill. Most congressmen are not technically literate. They're not engineers. They're more likely businessmen or lawyers, teachers perhaps. And so these are very complicated issues. And while tariffs, I think, probably have a lot of people agitated on Capitol Hill, the effect of tariffs on AI data centers is probably not something that most people are yet paying attention to, but they should.
It's really kind of interesting because we've talked so much about like this tech war between the United States and China. And listening to your conversation, it just feels like you sound like we really don't have anything to be worried about. Is that fair? Am I misreading you?
No, I think we have something to be worried about because we know that other countries will try to steal our best techniques, right? So unless our labs have exquisite cybersecurity, the idea that other nations wouldn't steal our best models, we know, for example, that Chinese espionage in the defense sector is pervasive, right?
But there's espionage that goes both ways, right? To be fair.
Sure, absolutely. We have more to lose when you have the exquisite technology. You have a lot more to lose by people stealing it, right? They're trying to get it from you. So,
but do you think that? Then do you think something like DeepSeek, in your view? From all assessments so far, it just sounds like China's figuring this out, and maybe they can do, AI models in a much more productive, energy efficient, less expensive way. So it does sound like there's expertise there as well.
Oh, there's incredible expertise. Universities like Tsinghua or Peking are among the best in the world. Chinese engineering culture is extraordinary. They're turning out many more STEM graduates per year than we are. So I don't underestimate what the Chinese can do. But I think most people believe that there would have been no DeepSeek without, say, a ChatGPT. They used American models to so-called distill. They're probably hearing things in San Francisco dinner parties that get back to China about how to do things, techniques. So I think America is still the leader. But again, we have to safeguard it by building data centers, by turning out engineers, by securing our models that we do develop here, and making sure that these export controls really do take effect so that the Chinese can't import the top NVIDIA chips that are so essential to making frontier models. So we have to be wary. But I think we need to realize that the U.S. has a lead and that our job is to secure it and make sure that nobody can catch us.
Hey, Brad, I want to take a hard turn here. Just because we have you on the program, I want to tap into your expertise, not just on AI and tariffs, but also on politics. Curious what and because you're still in touch with your former colleagues in the House, the Democratic Party, according to many polls, I'm going to just cite one here, but this is the March NBC News national poll, the Democratic Party reaching an all-time low in popularity. That was in the middle of last month. What are Democrats supposed to do right now? What do you think they should do?
Well, I think we need to reorient. I've been advocating for that for some years now, that we've lost our way, that kind of the progressive message no longer resonates with most people. It doesn't seem to address their most important concerns. And so we do have to get back in touch with our roots, which is a party of the working class, realize that people are struggling to raise their families, not only economically, but in a culture that many of them they think is quite poisonous to them, that there's a massive gap between the elites of this country and the rest of the nation, and that the Democrats are too often the party of the elite class, who could dominate the commanding heights of media sometimes, or politics, but are not enough to win elections. And so those are all things we have to do.
Who's the one person who you think can do that?
I'm hoping Hakeem Jeffries can do that, right? Who's the leader in the House, and that he seems to be very competent, very able. My hope is he can do it. You know, like Pete Buttigieg, there'll be some interesting people run for president in the next election who I think realize the need for a new message, and hopefully they can offer that.
Hey, just because your background is so cool and interesting, and you were General Counsel of the Army during the Obama administration, Undersecretary of the Army, too, just got about 30, 40 seconds. The alleged, or what seemed to be, was the use of Signal, and to have a chat, which seemed to be a breach of security by the Trump administration. Your level of understanding on how this all works? How bad was that? I guess I want to ask you in your view.
I think it was bad. You can understand it. Very easy, right, to use Signal as opposed to secure lines. You have to be in a skiff or in some other kind of place like that. It's totally unacceptable. When I was at the highest ranks of DoD, Undersecretary of the Defense, even working with Ash Carter there, the idea that you would use private email or Signal, it was so forbidden, right, that you would certainly have an IG investigation and likely be fired. So it was folly for them to do that.
All right. Listen, run out of time. Hopefully we can come back to you because we feel like we could really talk.
They let us go along with you, Brad. They let us go along with you.
We're like constantly like, can we go more? Can we go more? Brad Carson, thank you so much. Co-founder and president of Americans for Responsible Innovation, joining us from Tulsa, Oklahoma.
Former congressman, too.
Former congressman, yeah. So understand certainly how the private and public service sectors kind of work together.
Taking a look at markets today, Carol Masser, up 0.4% on the S&P 500, the NASDAQ finishing higher by 0.9%, the Dow in the red ever so slightly, just down fractionally.
Let's take a look at some stocks on the move on this Tuesday. Bloomberg News equities reporter Nora Melinda on Tuesday's Stock Movers. So Newsmax, how could you not talk about Newsmax today?
I just think it's such an insane number. That's why I love talking about these big numbers, right? So we're seeing Newsmax shares that ended for triple-digit gains today, up 179%. We know, of course, that Newsmax is owned by former New York Post journalist Christopher Ruddy. And this company really got a lot of traction during the election time period, the run-up to the election, as people were tuning into conservative media ahead of President Trump's presidential election. This company IPO'd yesterday and listed on the New York Stock Exchange. The company has a market value of more than $10.7 billion, but it did surge triple digits yesterday, 780% jump.
No, it's $30 billion.
Is it?
Yes.
It's $30 billion.
Where am I speaking?
No, listen, I'm with you because at one point...
That was probably yesterday.
Clearly, I'm outdated.
Earlier in the session, I actually had noted it, and I was like, oh, it's now like a $10 or $12 billion market cap, but it just kept going up, going up.
My goodness.
It is a $30 billion market cap company. It is up 2,200%.
Wow. Making Chris a billionaire now.
Sorry.
Oh, yeah, he's a billionaire now. And
Easily.
just to Romaine contextualized this for us during our simulcast, looking at Warner Brothers Discovery, for example, that's a $25 billion company. Paramount Global, an $8.3 billion company. If we're talking about, what about the New York Times? Because
all I'm going to say is, mid-May, they're going to report their earnings. Cannot wait.
So New York Times, I'm just pulling it up on the terminal, $8.2 billion company.
All right, we got to move on.
The comparison's insane.
Yeah.
We just got to move on.
We'll see how long it goes for.
I know.
Stuff does not last forever.
Right. Keeping kind of in the realm of entertainment, I was also keeping an eye on companies like Vivid Seats and Live Nation. We had Vivid Seats falling. It fell about 2.4% today. Live Nation did end up 1% higher, but why we've really been looking at this today is because President Trump signed an executive order. He's really trying to crack down on ticket scalping and fees. We had our colleague Kayla Gardner in D.C. She wrote about this on the terminal yesterday evening. But essentially, Trump is trying to direct the FTC to work with the DOJ to ensure that competition laws are enforced in the concert and entertainment industry. I don't know if you guys remember way back when Taylor Swift's concert tickets were
that
surging.
was not very long ago.
I know.
In my lifetime, that wasn't long ago.
I feel like
Nora.
so much has happened since then.
She just finished her tour. They were really expensive.
So much has happened since then, but they were so expensive.
But they were expensive
What era
because
was
they were
that?
in demand. Like, is this about the fees and stuff that?
Thank you for laughing.
No, but
Nora.
is this really about the fees that are thrown on top of everything?
I mean, he's saying that he's urging for transparency at, quote, all stages of the ticket purchasing process. So, I mean, of course, that's not the best news for places like Vivid
supply and
Seats.
demand is supply and demand. But
That's
I just
true.
feel like
they can really run up a ticket.
when scalpers used to buy them all and like.
You know, I'm just gonna throw this out
Are you
there.
are you just hurt?
I'm hurt because I don't think Bon Iver is going to go on a new tour this year. And Bon Iver's got a new album coming out in a little over a week. This is my favorite band. I wouldn't call it an art project. It's not even a band. You guys know what the Bon Iver stands know what I'm talking about.
I was like, oh, is this something your son like listens to?
I know.
Well, he does because he's forced to listen to it because I force him to listen to
Bon
it.
Iver sounds like
No,
Probably forced
Bon
the headphones
Iver.
on.
Bon Iver.
You might have to do the spelling.
Sounded like
Where's Cece? I gotta
We're a
find
little
Cece.
lost over here.
It sounded like Bon Iver. Okay, come on, we got to get to one more. PVH. This was a
Okay.
stock that I highlighted.
Yes. A name in the green. Owner of Calvin Klein and Tommy Hilfiger. We saw double-digit gains today, up 18%. That's the best day in 2 years for the company. It said that it expects sales growth
I know.
to be flat or slightly positive, but Wall Street was thinking that they would have